Welcome back to the portfolio updates. Currently, the stock portfolio sit at a combined value of just over 56,000 AUD. This is made up of the 22,632 USD in my stake portfolio, which is now up close to 25%, up 4,462 USD, and in my Vanguard Australian portfolio, which is currently sitting at $22,234. First, I'll break down through my American stake portfolio. Currently, none of my holdings have changed since the last video, and for a while now, I've been holding the same positions and steadily investing more, month over month. Going through my transactions, you can see there wasn't any recent transactions of any buys or sells since the beginning of February. I got the Apple dividend, which was quite small, at just over $4, and the Costco dividend of just over $2. But as I've stated since I started this portfolio, the goal is not dividends, but it's capital gains. In comparison to my Vanguard portfolio, where I get much larger dividends, but the capital gains is a bit less. Going through my stake portfolio, over the recent times, most of my positions have been in the green again, one of the biggest being Amazon. This position is up nearly 15% in the last 3 months and has had an amazing year, up 75%. I actually sold out of my Amazon position well over a year ago now, and I only hold a tiny position worth $71. This position is now up 26%, and I've constantly gone back and forth whether I should sell it or keep it or add to it, and I decided to just keep it there, sitting there for old time's sake, and it's actually not done too bad, up $15, but looking back now, I probably should have been investing a little bit more as it dipped down. Going through the rest of the portfolio, on the other side of things, Apple is a position that has not had the most recent time. The stock is down to $182, after previously being nearly $200 a share. I'm someone who's held Apple for a decent time now, and it was one of my initial first ever purchases. My average price is still $140 a share, so I'm well in the green at 30% and up 710 USD, but there was a point where I was up nearly $1,000 in this stock, and it was my biggest individual holding. It sits at $3,074 in total equity, but I don't have any plans of selling out yet at the time. Whilst the stock hasn't had the best year compared to other stocks, it's still up 22% over the last year, and this is very strong, outperforming the market average of 8%, so I can't complain. Plus, Apple's a stock that I plan on holding long term because I don't see it going anywhere. Whilst it might lack the creativity that you think of other companies and the growth aspects that other ones like Nvidia or future stocks have, Apple's become a blue chip, and Apple is held everywhere, from institutional funds to your mum and dad stock investors. Everyone seems to have some type of exposure to Apple, and I don't see it going anywhere anytime soon, especially when you walk around in your day-to-day and see everyone either having AirPods in, an iPhone, a MacBook, or even an iPad. They don't seem to be going anywhere, especially with their recent release of their Vision Pro. Looking at the rest of my portfolio, positions such as Costco has seen a massive rise recently, with the stock valued at over $723 a share. The stock is up 25% in the last 3 months, and I was on here saying if the stock comes back under $550 or even close to $500, I'd buy again. And since I said that, the stock has just absolutely ripped up, and my total equity is close to $1,500, meaning I'm up 46% or $472. My average share price is $494, which is why I was hoping the stock would come down. But looking over the last 3 years, this stock has been an amazing investment for investors, and it's not something I plan on selling anytime soon, as I use it to diversify away from my major tech holdings. Positions like Google are ones that I've recently added more into, and I'm very much flat on my additions currently. My equity is around 1,200, and I'm up only 3%. But this is something I'm looking a bit more long term in, and I'm not too worried about the short term for this one at the moment. I previously held a larger position in Google and sold out, but decided to buy more in, as you saw at the start of February. I currently hold 8.3 shares at an average price of $137. Whilst I continue to make my way down, JP Morgan is a position that I've held for a long time as well. Similar to Costco, I invested in JP Morgan to help diversify away from my heavy tech-focused portfolio. The position is now up nearly 30%, and my average share price is around 140. I used to be invested in banks such as Goldman Sachs, but when I did my analysis on the best banks that I wanted to hold, JP Morgan was clearly my favorite. It's such a big bank that, like the others, another common thing in my portfolio is that it's not going anywhere. JP Morgan is such a strong, formidable bank that's gone through its ups and downs and is consistently performing. I know a lot of people don't like to hold banking stocks, but a reason why I invested this was also because of its stability. And even though I'm not focused on dividends, JP Morgan does still pay a 2.32% dividend yield, which isn't the worst to get every now and again. But I slowly don't see myself adding to this position and just kind of staying steady where it is now. Looking at the rest, McDonald's, Microsoft, and VOO are three of my most interesting and recent adds to the portfolio. McDonald's was a stock that I decided to buy into when it fell down here. As you can see, my average share price is $256. I thought the company was extremely undervalued then when it had this dip, and clearly so did the market, as it shot up since I invested into it. Going into a McDonald's store is always full of people, and the company has been around forever. Like the others, I don't ever see it going anywhere, and this felt like the perfect time to buy in. At the moment, I might lay off on further investments for the time being, but I'm very happy with when I bought in and my decision to invest in McDonald's. Microsoft has slowly become and grown into my biggest position by a landslide. Apple used to be, but with Microsoft's recent success and the strong stock performance, the stock is now valued at $402 a share, and my total equity is edging closer and closer to $4,000. I'm up 48%, or $1,240 in total, with my average share price only being down at $271. I commonly say Microsoft and Costco have the best business model and of any of the stocks I hold in my portfolio. Microsoft, with their consistent, recurring revenues, and with their recent additions, as you can see, into the AI space, they seem to be really stamping their foot down, and this is a stock I don't see myself selling out of anytime soon. I also don't think I'll be buying in with its price jumps, but such as VOO, this reflects the overall market, and this has really told a story on my investing horizon and in my previous investment decisions. VOO, I've been up in, I've been down a lot in, and it just kind of sums up with the overall market. I'm currently up 16, nearly 17%, or 1,540, as it's by far my biggest position at 10,643 USD invested. The reason why I decided to keep around 50% of my portfolio in VOO is just to help me diversify. Because like I said, when I began investing, majority of my portfolio, probably around 80%, was heavily invested into tech giants such as Apple, Microsoft, Tesla, and Meta. I slowly diversified away, and my VOO position has grown and grown. I'm bullish on the overall stock market, and I believe this is one way of capturing gains in stocks that I'm not invested in directly, such as Nvidia or Netflix or even Meta. Overall, I plan to keep this position and hopefully keep it around 50% of my portfolio, just to keep things nicely weighted out. I haven't had any recent additions into the stake portfolio due to the strong USD against the AUD conversion rate, meaning when I put my money in, it's worth a lot less, it feels like. But I will continue to invest in, as I hopefully plan to get this to $25,000. On the other hand, my Vanguard portfolio, I did just do a recent addition in for close to $900. I also have a pending transaction for $847 worth of Vanguard's International Shares ETF. Currently, the stock portfolio, like I said, is over $22,000 for the first time, and it's combined with two positions: VLC, Vanguard's Australian Large Company Index, and VGS, Vanguard's Index for International Shares. These two give me a strong balance between Australian investments and international investments as I hedge my bets. The reason why I invested in Vanguard and opened this account was for a bit more stability away from my stake positions where I could pick individual stocks. This was going to be a bit more of a broad market tracking ETFs where I could slowly build wealth in these and invest and get bigger dividends as I hopefully use these funds one day for something like a house deposit or future decisions with what I can do with them. Overall, VGS just holds the majority of the main companies that I already hold in stake, such as Apple, Microsoft, and is up 25% in the last year alone. In comparison, VLC focuses on the Australian large stocks and is only up 8.47% this last year. They both pay a strong dividend, and that is one of the best benefits that I have, especially in Australia with franking credits. My overall goal with this portfolio is still to slowly invest. Through January, I didn't put any money in as I had other life expenses I was focusing on over putting the money into my stock portfolios. Through February, in my next pay slip, I will put even more money in as I slowly hope to build these positions to over $60,000 combined. The compound interest has really been kicking in recently over the last year and so. As you can see, it's nice looking at these dollar values knowing they're up so much compared to when I was down nearly 20% at points. I'll continue to slowly invest and track them on YouTube just to hold myself accountable. And hopefully, in future years I can look back at these and look at the growth of my portfolio, what I did, what were the winners, what were the losers, and things I learned. Cheers.